Good morning, everyone. This is Brad Matheny. Today is the 11th of July. This is an SPY daily chart. We're going to be going over today's big breaking pattern. We're in the breaking up down pattern in a counter trend mode. Now, this is where things get a little interesting. Okay, we're moving into a volatility period, we're moving into a topping period. You can see the counter trend mode. Then we get the carryover, crush day on Saturday, reversal rally in trend mode on Sunday. Remember, I look at these as psychologically taking place on Saturday and Sunday, moving into the exhaustion rally, the exhaustion carryover, and the possible breakdown, and then major crush bar. So this is volatility, folks. Okay, this is where I expect to see volatility, and we could have a very interesting initial move here that carries over into something secondary on this breaking pattern. So before we get into the other things, I wanted to highlight some things. When I make my decisions about what's going on, it also comes from the other detailed research that I do, and these are some of my custom indicators. So these are my custom indicators indicating that we have moved into traditional bullish trending here. Over the last 2 months, we have moved into very solid bullish trending. This is the accumulation phase index. Secondarily, we have let me find it back over here. We have the smart money index, which has moved back into moderate trending here. So now we're up into trending mode in this area. As long as we stay in this area, we will be in trending mode. We move down here, we into consolidation, or up here is consolidation. This is the SPY base trend index, indicating a fairly strong US dollar demand within a trending mode. So we're moving higher. And then we have other indicators like the smart cash index. Let me try to find that. Here is the innovation index, is moving very strongly to the upside. I'd been calling for stocks to move into innovation for over 2.5 months. There's this innovation index. Here's the US leading index, broke out of the flag formation off a new high. And you can see we've got a perfect A, B, C, D, E flag formation. We're in a breakaway rally phase, folks. So this has been setting up for months in terms of what is actually coming. Here's the fear index up near 7, 6.84. That's our first level of concern is 7. I kind of think we're going to rally up into it. Here's the sentiment index, moving quite a bit higher. And you come over here. Here's the cash flow index off of this deep low. I think we're going to be moving quite a bit higher up into this apex. Here's our A, B, C, D, E moving up. Hit this level, pause, and I think we're going to see it really rally here through earnings. And then, of course, let's come in here to the volatility index, which is at 24.92 as of last Friday. All of these are as of last Friday. This is very strongly bullish, could get a bit of a pullback, which I think is coming next week, not this week. I really don't think we're going to see too much this week, although it could happen. But again, very strongly bullish. This has been, you can see here 2022, 23, 24. We've been in this bullish phase, moderate pullback right here, but been in a very strong bullish phase for the last 3 months. And like I said, I use these indexes to help gauge my decision making. So it's not just this, it's a lot of information that goes into actually making these decisions. So, given the fact that we have the counter trend breaking pattern, and I highlighted this a little bit in yesterday's afternoon pattern, I'm going back to a 30-minute chart now, spreading these things apart, come back down here and crush everything back together. I'm really believing that we are going to see some pullback mid-morning, pre-morning off the CPI and early data. And I really do, and I may move this a little bit. So move this maybe into this area, and understand that we've had a pretty solid move to the upside. I've got my highlighted targets here. Let me shrink this down a bit. And what we're looking for here, folks, what I'm looking for is, so we have this gap up on the 8th, okay? And that was Monday. I'm going to come down here to this level, which is the pivot level, up to where we're at here, which is the highest close. And that puts us into an area where our critical support is right here. So 558. Oh, come here, go away. 558.64 to 558 roughly. That's critical support for what we're trying to do here. Let me highlight this. Okay, perfect. Make it a little darker. And that's going to be our critical support today. So we could see this move roll down into the 559, 560 area, maybe a bit lower off of the CPI data. I think we get a bit of a pullback in the morning and then move into a very solid rally phase into the end of the day, possibly pushing up above this 564. Now, remember, I had indicated that we would move into this 564, 565 area on Wednesday, and here we are on Thursday. This is our big breaking pattern, and I really do believe that we're going to still trend to the upside. I think we are still trending based on that data that I showed you, and I think that the news cycle today is, look, to be honest with you, I expect CPI to come in a little bit hotter than normal. All of the data has been coming in fairly strong. And GDP, I need you to understand, strong CPI and GDP is almost baked into the cake right now. Okay, you got a stronger U.S. dollar. You've got a wealth factor that's been in place for, I don't know, about 6 years, 7 years, since probably 2018, 19, when Bitcoin really took off. And we started seeing the Airbnb and the real estate blow out after the Fed raised or lowered the rates down to near zero prior to COVID, and then lowered them basically to zero after COVID. We've got a real wealth effect here taking place. Consumers are still spending money on cars, and they're still spending money out there in the economy. And after all the spending, every stimulus we've tried to put out to build the economy, to think that, that inflation is somehow going to subside because we've what, blown through the wealth effect. We consumers all of a sudden are feeling, yes, at risk consumers are feeling quite a bit of pressure. But if you're making 60 or 100 or $200,000 a year, you're not feeling too much pressure. Okay, and that's kind of what I think is really happening in the world, is that there's a dichotomy. There's two separate worlds. There's one where everybody's fine and everybody's making money and everybody's paying their 2.5 or 3.5% mortgage on their house, and loving the fact that their house has doubled in the past 4 years in value. But then there's the other side of it where people are struggling. The younger kids are struggling to make things work, and they just don't have that wealth effect. They may be living off mom and dad a bit, but I think that wealth effect still needs to play out. And so that's why I'm going to warn you that I think we basically have a pullback, a chance for a moderate pullback, maybe down into this 559, 560 area in the morning. And I'm going to call it a chance. I don't really know. This is a breaking pattern. We have a lot of data. Obviously, we're 560, 80. We're down a little bit right now, but the reality is we could come in sideways and then start to rally off of data, or we could come in with a nice solid pullback down into this area. And I think that either scenario is legitimate. Okay, I think either scenario is completely legitimate, given the fact that we've got a very strong news day, moderate earnings data coming out, bigger earnings data hitting tomorrow. And I think it's going to be a very interesting overall day to see how we play out. So QQQ is probably going to end up seeing a fairly solid move. Let's see here. This is my breaking pattern up here. Boy, I got a lot of drawing up here. Let's get rid of some of these previous things. Okay, there's our channeling. And it's kind of interesting. We could probably carry these out a little bit for some guidance. And you can see here how it's lined very cleanly up with this. These are my expectations. We're below my expectations. Not going to actually draw or change those. Get rid of this up here. And again, if we open in this area, which is where we're at, we would likely then come back down into this area, trying to find some support right in here before attempting to move higher. And I think the move higher is baked into the cards, guys. At this point, we're moving up, then probably consolidating, then moving up here into this last engulfing pattern. So be aware. I think that the upward trend is kind of baked into all of this analysis. Remember these custom indicators that I showed you, all of that trending, all of that analysis, all of that data. For example, this moving back into trending mode. As long as we stay in this mode, we're in trending mode, and trend is up. So you see, we've just come out of consolidation mode and we are moving higher. Okay, this is trending. So, it's pretty easy for me to have this data and say we are in trending and we are in bullish trending. So how can I tell we're in bullish trending? Well, number one, I can take a look at this data and say that we are now bullish. Okay, I can take a look at this data, which is the leading index, which was back here, and say we are now bullish. We're breaking out of this pattern. We're flagging an upward trend. We're apexing and moving to the high side. It's clear that the data is there. So a pullback, maybe you can call it a bit of a correction, but it's a pullback in a very solid upward trend. And again, look here at the daily. We have been trending higher for months, literally April, May, June, July, and now we're getting ready to roll into this sideways pattern right up here. And we just basically have a little bit further to go. We have between here and roughly here about 1.25%, 1.5%, which could be today or tomorrow before we reach this peak. And then we roll into this channel, I believe, this sideways consolidation, just like right here and right here. And then we move higher again into the early August timeframe. So we're looking very clean right now for I'm going to do this, spread this apart. We're looking very cleanly at a fairly strong rally phase still playing out over the next 2 or 3 days. Remember, this is our top. This is our last engulfing pattern. That's where we're going to see probably the last phase of a rally take place before we see some rotation the following day. Same thing applies back over here to the SPY. This is our last engulfing pattern right here. This is our peak. Okay. And this day, I think we're going to be peaky. That's going to be our top. So we're still down here, indicating we can move higher into this area, which is Monday, Tuesday of next week. So I think that we continue to melt upward. I would expect some volatility on the early CPI data, and we'll see how it plays out. Lastly, let's come over here and take a look at Bitcoin. Bitcoin looks like it's up another $1,000. It says 1,052 here. Remember, I had called the Bitcoin to find support. Just the same chart. Doesn't look like it's the same chart, but that's fine. It's probably this one. Yeah, here's the chart. So Bitcoin is finding support around 57,000. We're rolling into this flagging formation. We need to see whether we get the flag here on this tighter flagging formation or all the way up here. Holding up very, very well throughout this base and bottom. Going to be very interesting to see how it flags out. But it's just, highlighting some of the videos that I've been posting up. And lastly, gold. So as the dollar continues to try to strengthen, dollar's down a little bit. Gold is going to make a very strong move after apexing here up to about probably 2650, 2750. And again, this is part of my custom index as well. So there's my expectations going higher. And we're going to see how this plays out. Okay, I think gold is just going to melt up into the election, and I think it's going to be based on global fears. I think it's a very good move for gold right now to be trending up in the 2600-2700 area. Silver could get, believe it or not, could get up in the $38-39 area between now and the end of the year. So overall, very solid, very healthy. Okay, go back to the SPY. And we will go back to our 30-minute, wait for all this to load. And there we are. So, ladies and gentlemen, whoops, get rid of that. Whoops, get rid of that. Keep dragging things. Here we go. We're looking for this move here. Either a moderate print on CPI, and we just continue to rally, or we get a lot of volatility on CPI and we retest down here on 559, then rally higher. Remember, the volatility starts coming in really on Monday and Tuesday and Wednesday. I think everything else is just really a moderate melt up with a little bit of volatility. So I am still expecting the SPY to target, 564, 565, 550, 66, maybe even up into 570 here on this Monday. So we will see how it plays out. Ultimately, I think we've got to get up into this area. Then we get this big volatility and get a big breakdown pattern into early next week. And this could be big news. We'll see. Okay, guys, that's it for now. Talk to you later.